Hey guys, I hope you and your families are doing well. In this video, I'm going to help you better understand QULLAMAGGIE's breakout trading strategy. To do that, I've got 3 trades lined up for you that are all slightly different: Coinbase, AMD, and PLTR. What we're going to do is deconstruct each trade into the 4 component parts. What are those 4 component parts? Number 1, how do you identify a high quality setup? Number 2, how do you control the risk to create that asymmetric risk versus reward trading opportunity? Number 3, how do you mitigate the risk so you free roll the trade and you are then risk-free on the position? And then number 4 is, what are the selling rules, what are the selling guidelines that you are using to optimize the profits, both in terms of monetary gain but efficiency of the monetary gain. So you can probably already tell by this introduction, this isn't going to be how to trade like QULLAMAGGIE in 5 to 10 minutes. This is going to be a very thorough video that takes you deep down into the weeds. Market Surge are today's video sponsor. If you're interested in a discounted trial, then there is a link in the description and the comments section below. Okay guys, we're going to go on to the setups of Coinbase, AMD and PLTR in a couple of minutes, but let me just ask you a question at the start of this video. Would you like to be able to screen for these type of setups really quickly? If you do, then my custom stock screener is specifically designed to find these type of setups. Now what I'm going to do is I'm going to give you a preset screen for free for a week so you can have a play around with it and find these type of setups. So go over to my platform, sign up. I'm going to make this screen here available to you for free at the time of publishing this video. So go to the preset screens, scroll down, click this one: US powerful uptrend with high dollar volume plus high ADR percentage. These are the criteria that we're putting into this. Country, US, price above the 21 EMA, 50 SMA, 200 SMA, average dollar volume greater than 100 million. If you become a member, you can tweak these, play around with these, and then the 20-day ADR percentage above 2.25%. So currently our database has around about 5,500 US stocks. We've taken it down to 99. Now the 2 optimal ways to then be looking at a screen like this is sorting them by ADV50, so looking at the most liquid stocks first. So if I did that, you'd be very familiar with a lot of these names that are coming up, okay? Nvidia, Meta, Broadcom, Coinbase, Netflix, MicroStrategy, ARM, Qualcomm, CrowdStrike, so on and so forth. If you want to look at the quicker stocks first, so you want to get the really kind of high momentum stocks, do this, okay? ADR percentage, 20-day, click that a couple of times, and then you'll start getting the really quick stocks to the top. Now watch this, okay? Then we just go and click charts like this. So this is going to be the quickest stocks to the top, side-by-side view, super duper quick. You click this icon here, you'll go straight into TradingView, click this hamburger menu, you can go and put them in various watch lists, import them into TradingView, Market Smith, TZ1000, whatever you want to do, right? And then you just literally scroll through it. Okay, clean spot. This is a crypto related stock here. You got this one here, biotech related stock. So you then get the group here as well. So pulled down, okay, blue lines, 21-day EMA, MicroStrategy, crypto stock, really powerful stock. Coinbase, we're going to be talking about this one in a couple of minutes time. Let's keep going down. Celsius, big short interest, TML type stock for me. 2 others here. You got ARM, semiconductor stock, okay, really good move here, pulling into the 21-day EMA. Lift, I bought this off the 10-day EMA. Now it's powering higher like this after this positive earnings reaction. So they are the type of results that you're going to be getting super duper quickly, okay? So as I said, that screen there is going to be free for a week at the time of publishing this this video, so if you want to use it, then you can go and check it out. Okay, so first up to bat is going to be Coinbase. Now I'm going to make an assumption at the start of this video that you are quite familiar with a common continuation type basis. That is going to be your cup and handles, your flags, your wedges, your pennants, your Davis boxes, your channels, all of that good stuff. So let me ask you a question at the start of this video. What chart pattern do you see? What do you see with Coinbase? For me, I see a cup and a handle. In my own trading, I was targeting it through the high here with a buy stop limit order. Didn't get filled, which is a bit irritating if I'm honest with you, but that is a video for another day. But I see a cup and a handle type pattern forming here. And what's important to note as well is, how did the stock get to the continuation type base? Like, how did the stock move from this point here to this point here? Now this is important because again, we're going to deconstruct this into the 4 components of every trade: identify, control, mitigate, and optimize. So my brain is already fast forwarding to go, okay, let me get a feel for the stock. Let me get a feel for the character. What I don't want to see when a stock goes and builds a continuation type base, it could be, say, like a triangle. It could be a little bit more of like a wedge or something like this. It could be a cup and handle in Coinbase's instance. What I don't want to see in the prior uptrend is something that looks like this. You ready? Something that looks like this. Okay, I don't want to see that. Now, why don't I want to see that? Because again, when we fast forward to the final element, the final component of a trade optimizing the profits, which for me, what are the selling rules? What are the selling guidelines that you're going to try and use to optimize the profits on this specific stock? both in terms of monetary gain but efficiency of the monetary gain. So what I like using is the 10-day and 21-day as trailing stops, but if I think it gets extended from its 10-day, potentially choke off part of the position, all or part of it, depends how extended it may be and how climactic it looks, by adjusting my stop loss to lower the day, lower the day, lower the day. So what I'm trying to do before I even enter a trade, I'm trying to get a feel for how is this stock going to move. Okay, what is going to be optimal in terms of managing the position? So yes, we're talking about the identification, but the identification is already linked to the final component of the trade, optimizing the profits. You want to get a feel for it. Okay, is this stock just an absolute chop fest like this, and it's just going to be an absolute nightmare to manage? And you may think I'm exaggerating. Some stocks do move like that. I stay away from them, like don't want to touch them with a barge pole. Okay, this is really good, just nice. Good uptrends like this, just staying above the 10, staying above the 21, and then what's even better is you get this clear bearish change of character. I call this bearish synchronicity. Opens on the high of the bar, goes out on the low, the volume pops, end of the intermediate trend. Done, simple, easy, exit. Okay, stock's going to take time to rebase, then it does rebase. Okay, so this here, in terms of the identification, we're looking at the character of the stock, we're trying to get a feel for it. Something else you can do as well is you can go back, you can study the stock. I'm not going to do it because otherwise this video will be really, really long, but go back and study the stock from prior breakouts. How does this stock like to set up? How does it like to move following these setups? How does it move into the setups? So what is it doing in the base, but what is it doing pre and post base as well? Really try and get a feel for it. Okay, does this stock like setups around the 10-day EMA? Is the 10-day EMA going to be too quick for this stock, like it may be for like a Microsoft or an Apple or an Amazon or something like that? Or actually, can you find a couple of instances, actually, do you know what? The stock builds a cup and handle, it builds a continuation base, it sets on the 10-day and then it just powers high. And then it goes up this much on average. So you're trying to get a feel for the stock and how it moves, okay? Now, something else that's also important is this, okay? I love this, okay? Absolutely love it. 52-week highs on the relative strength line. If you want to see some of the indicators, so this one here, this RS line, free, okay? I'm giving a lot of free stuff in this video, aren't I? Jack Corsellis RS line, it's free. Pin it to the bottom of your charts like this. I like seeing these blue dots. This means leadership. It means 52-week highs versus the S&P 500. You can also see on the relative strength line, what chart pattern do you see? Oh, a cup and handle. No, just interesting. Just something to know, okay? But these 52-week highs, I like trading stocks with 52-week highs, preferably pre-base, in the base, post-base, because it just tells me I'm trading the leaders. I want to be involved in the leaders. Don't care about the laggards, just want to be in the leading stocks. You'll also see you got this percentage in the top, okay? If you wind the video back a little bit, you'll see which ADR percentage that I use. Now you see this is 6.5%. So on this day here, the average daily range percentage of Coinbase is 6.51%. Now that's important for a couple of reasons, okay? If you look at the SPYs, ebbs and flows, but around about 1%. If you keep in your head about 1%, sometimes up to 1.25% for the major indexes. So we're talking SPYs and Qs, right? But if you keep in your head around about 8% is what the ADR percentage of the major US indexes are. Now, why is this important? Well, Coinbase is circa 6 times quicker than the major indexes. So this is kind of the reasoning behind this, okay? If the SPY, let's say the SPYs is going to go up 10%, okay, it's plausible that this stock here with an ADR percentage of 6 times that of the major index could go up 6 times that of the major index. So if the SPYs is going to go up 10%, it's plausible to think this stock here, well, it could go up 50, 60%. Such is the character of the stock, and such is the point of trading quicker stocks in the market. Okay, if you're trading stocks that have ADR percentages around the indexes, so around about 1%, like 0.75%, they're going to be really, really slow. So this is the point here about the identification of looking at the quicker stocks. So remember what I showed you earlier in terms of stock screen here, okay? That you can look for the quicker stocks. You can create your own screens. You could set ADR percentages at 3%, 4%, 5% if you want to be going for the quicker stocks, okay? So as you can see, there's a lot here. But when we start deconstructing it into the components of the trade and really break it down, okay, what makes a high quality setup? That's the identification. Okay, how do we think about controlling the risk, creating those asymmetric risk versus reward trading opportunities? Now, the ADR percentage is also going to be an important metric when we're thinking about controlling the risk. Okay, so what we're going to do here is we're actually going to go bar by bar onto the 5-minute chart, and we're going to do an ORB, which is an opening range breakout. Okay, so you can use buy stop limit orders, which is what I used when I was targeting Coinbase through here. Didn't get filled, really irritated about that. Or you can do an ORB. They are, in my view, they are going to be the best 2 order entry method techniques when you're looking at these quicker stocks in the market. Okay, now, and buy stop limit order, can have pros and cons versus an ORB, and an ORB can have pros and cons versus a buy stop limit. I recently did a live coaching video on it on my platform. Anyway, but here, okay, we're going to be targeting it through. So remember this price here, okay, of 170. So now what we're going to do is we're going to drop it onto the 5-minute chart. Now what's quite cool about this is we can go bar by bar. So again, if you've watched any of my videos, you'll probably know I'm a massive proponent of deliberate practice. Okay, this is a concept made by Anders Ericsson, deliberate practice. So everything is very, very intentional. It is very deliberate what you are doing. You're trying to train specific skills. Realize that trading is a skill set, and there are components within trading that you can improve upon. Okay, you can get better at identifying setups. You can get better at controlling risk. You can get better at risk mitigation. You can get better at optimizing the profits. We can get better. It's a skill set. So we can train that skill set very deliberately. So Coinbase, okay, 170, nice round number, I just moved it. 170 is going to be our pivot. Okay, so watch this. This is going to be the first 5 minutes, okay? That's the first 5-minute bar. So you visually want to see, say, an ORB here, okay? We've identified the setup on the higher time frame. We're dropping it onto the 5-minute chart here. Okay, we're looking for, in this instance here, an ORB. So as I said, I was targeting this one with a buy stop limit order, didn't get filled. I was trying to buy it within 0.5%, nice and tight, didn't get filled. Don't know why, basically, really irritating, but it is what it is. Okay, so anyway, Coinbase here, first 5 minutes. What do you see? Now this is where you want to make buying tangible. Okay, you know, you hear these concepts of supply and demand, supply and demand, supply and demand, right? You want to make it tangible. Okay, you want to be able to see supply and demand. You want to make the invisible visible to you by understanding concepts. So this is what buying looks like, right where you want to see a lot of buying. Why is that? Well, if you take a look at the bar in my view is a wide range relative candlestick. Okay, on a relative basis, this is a widespread candlestick. Okay, visually, like if you look at this bar compared to a lot of other bars, it's standing out, right? This is a pretty wide range bar, and it's happening where you want to see it. So what's happening here? Well, the prior close here about 166.04, okay, 166, and the high of the prior day was 170. That's going to be our pivot, which is basically the buy point. So if I say pivot, it basically means buy points, it's where we're looking to buy. Okay, so what happens here? Well, the stock actually gaps up. Okay, opens at about 168.60, so, and then pushes up, widespread candlestick, and closes pretty strong, and then you have the volume coming through as well. Now what I'm going to do is just get the calculator. Okay, so if you look at the dollar volume in the first 5 minutes for Coinbase, so it's around about 600,000 shares are traded, and then if we take an average price, 171, let's say, just to get kind of an average here, okay? So the dollar volume in the first 5 minutes is about $102 million worth of stock. So think about this, right? Again, we're trying to make the invisible visible. You're tangibly trying to see demand, buying, a lot of buying. What does it look like? This is what it looks like, okay? $102 million worth of stock is traded in the first 5 minutes, okay? The bigger boys and girls are active here. What do you think they're doing? Do you think they're buying or do you think they're selling? That concept in your head for supply, selling, what does it look like? The concept of buying, demand, accumulation. What does it look like? This is what buying, demand, accumulation looks like. This is what a lot of buying right where you'd like to see it looks like. $102 million worth of stock traded in the first 5 minutes. So now the question becomes, okay, the stock's starting to break out. It's moving through the pivot. I'm seeing a lot of buying. Now, with an ORB on the 5-minute chart, you can do it on the 1-minute chart, 5-minute chart, 7-minute chart, 15-minute chart, half-an-hour chart, 29-minute chart, 102-hour, whatever you want to do. Okay, whatever you want to do. 1 minute, 5 minute, 15-minute chart are going to be more kind of standard ORB timeframes. So when we're looking at this here, what I'm going to do is get the fib retracement tool. Now, to clarify, I do not use fib levels, but I use this tool because it's very useful. Let me show you. So what I'm going to do is get the fib retracement tool. You can get it from over here. I'm going to hold control. I'm going to snap it to the high of the bar, and then I'm going to snap it to the low of the bar. Now, let me just show you the settings that I've got on this, okay? Double click on it. These are going to be the settings. 0 is going to be the stop loss level. 1 is going to be the entry level. 2 is going to be 1 times the stop loss level. This is going to make sense in a minute. 3 is going to be 2 times the stop loss level. This feeds into the second part of the trade, okay? We're flowing here. We're moving through the components. Identify, control, mitigate, optimize, okay? We're flowing through. They all go hand in hand pretty much. So this is how I set up the fib tool. Now, I'll explain why in a minute. So remember, it's moving through 170. We're now just going to make this line pink or something like that so it stands out, okay? So what we've got to do here now is think about how much initial risk we're taking. Now, as I said earlier, the 20-day ADR percentage can be useful. Ideally, we're looking for somewhere between half and 2/3, but if a stop loss starts with a 4 or a 5, so 4 or 5%, you got to think this is really, really, really good, okay? But ideally, we want to be less than that. So what I'm going to do here is now get this tool here. I'm going to snap it to the high and snap it to the low like that. So what are we looking at? Well, we're looking at 3.43%, assuming perfect execution, which equates to $5.98 risk per share. Okay, $5.98 risk per share. So then the ORB on the 5-minute chart is you are targeting it through the high of the first 5-minute candlestick, which is 174.38. Could you do a buy stop order? Could you do a buy stop limit order? Could you do just a market order as it starts moving through and you're visually looking at it? Yes, you'll have to decide that for yourself. Are you going to get some slippage? You're probably going to get some slippage. Certainly if you're doing ORBs on the 1-minute chart, things are moving pretty quickly, right? So what's going to happen here is I'm just going to now explain to you a little bit about the risk mitigation. So we're just going to flow here into different components. So we're getting ahead of ourselves a little bit, okay? So this is then going to be the risk mitigation side of things. So what I'm going to do is zoom in and I'm going to do this like this, okay? So I'm going to actually just delete this pink line. Do you need the pink line on? Let me put the pink line back on for you, but let's do it in like this color. Let's do it in this color here, okay? So we then don't get mixed up with these price levels. Let's just zoom back in here, okay? So what we got is the stock powering out through 170. That's kind of going to be our pivot. That's going to be the place where we're looking on the chart to go, okay, we want to see certain things happening right there if you're using an ORB like this. So our initial risk on the trade, we're going to assume perfect execution is going to be $5.98, which is going to equate to 3.43%. Now that's nearly, not quite, but about half the 20-day ADR percentage. That is really nice as a risk metric. Now, why is the 20-day ADR percentage also important to think about? Well, is it reasonable to expect Microsoft to go up 6.42% in a day? Would you expect to see Microsoft up 6% in a day, Apple up 6% in a day, Amazon up 6% in a day? Probably not, right? But do you know why? Well, because the character of the stock is they're not that quick. Whereas Coinbase, it's reasonable to expect the stock could go up 6.42% in a day. Why? Because the average daily range percentage over the last 20 days is 6.42%. That is the character of the stock. That is the nature of the stock. You've just got to realize different stocks are different. They have different behavior. Some of them will chop around all over the place. Some of them will be smooth movers. Some of them will have really high 20-day ADR percentages. Some of them have really low 20-day ADR percentages. Some of them will be uber duper liquid and have high 50-day average dollar volumes. It just is what it is. You just need to accept it and realize the stock ain't going to change. But you're looking for the type of stocks you want to trade. So i.e., preferably, they have high 20-day ADR percentage, high 50-day average dollar volumes. They trend really nicely. They're showing a lot of relative strength. Preferably, that's my stutter. Preferably, they have kind of blockbuster earnings, massive sales. EPS estimates going into all-time high territory, involved in new revolutionary technology products, just global products as well, institutional sponsorship, yada, 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 right? It's basically everything that O'Neill taught you in his book, How to Make Money in Stocks. So different stocks are different. This is where the identification comes in. You've got to decide what are the type of stocks that you want to trade. Stocks are very, very different. But when we're thinking here about the initial risk, we're then linking this into, so remember, about half to 2/3 versus the 20-day ADR percentage. Okay, anything that starts with 4 or 5, me personally, I think you got to think this is a really, really good setup. Any initial stop loss that starts with a 6, probably the risk versus reward is all out of whack, okay? But looking at this here, this is then important because thinking about this here, well, 3.43%, interesting. Coinbase has a 20-day ADR percentage, 6.5%. So that's nearly twice the initial stop loss that we're looking to take here. Okay, interesting. Could it go up 3.34% so we could take half of the position off and free roll the trade? So let me just show you this, okay? This is where we're going to get into a little bit of math. So just try and stay with me here. Let me drop this one down so we kind of get the exact figures like this. Let me just go up one like this. I don't know why it's done that. That's a little bit irritating. But anyway, okay, this here. So you see here, this is going to be the free roll targets as I was showing you on the fib tool a little bit earlier, okay? So imagine you get your entry here at 174.38, okay? If you were to sell half of your position at about 180.35, that would be a gain of $5.98 per share. Okay, so if you were to sell half of your position at a gain of $5.98, you have half of your position left, do you not? Yes, you do. And where's your stop loss? Well, your stop loss is down here potentially on the low of the day at 168.40. So how much risk do you have on the remaining shares? $5.98. Isn't that interesting what we've just done there? This is risk mitigation. So this is where you're then setting your free roll targets, okay, to sell potentially half of the position. In this instance, AMD, I'll do it at, we'll go for 2 times the initial stop loss, so we'll take a third off, so we'll do it a little bit differently. But this is where we can then have the free roll targets to then get risk-free on the trade. So let's just play this forward, okay? So everything flows into each other. So here, okay, so let's say on this bar here, you're going to have your entry at, let's say, 174.38, and this is how you can also practice it deliberately using TradingView's bar by bar replay function, which is quite good. Okay, so this is going to be our entry here, and let's say that we place our initial stop loss on the low of the day by a cent like this. So let's go here, so let's just then set these up like this. So it's then going to look like this. So our free roll target is then going to be up here like this. Okay, so what we do I don't know why they're out by a cent. That's really irritating me. They should be lined up perfectly. They're out by a cent. It's a little bit irritating, is it not? But anyway, you understand the gist, okay? So anyway, our entry is going to be here. Let's assume you get perfect execution. You're not likely to get perfect execution. Remember that. There's going to be a little bit of slippage, okay? So you're going to have to adjust these calculations on the fly, right? So now what we're then going to look to do is, well, let's set a sell limit order to take half the position off, okay? So this is going to be a sell limit order at 180.63. So this is where we're flowing here, okay? The identification leads into the controlling risk, leads into the risk mitigation, and then we go into the optimizing profits, which are the selling rules, selling guidelines to optimize the profits in terms of monetary gain, efficiency of the monetary gain. So we're in the position here. We can then put in a sell limit order for 180.36. That would then be selling half the position at a gain of about $6 per share. And remember, our risk is about $6 per share as well. So then they're just going to cancel each other out. So i.e., if Coinbase does this, it powers up like this and then comes crashing back down like this, and you get stopped out here, you're going to be around about break even. Can you get gap downs? Can you get slippages? Absolutely you can. So hypothetically, you are break even on the trade. Things can go wrong. Things do go wrong, okay? But here, we're stopping this kind of U-turn where you then get knocked out with a full stop, okay? We don't want that, okay? That's going to be irritating, especially when the stock shows you a profit and then does this. It's irritating. Been there 101 times. Don't like it, okay? So this is why I put such a heavy weight on the risk mitigation side, okay? So we're in the trade, we're in the trade, we're in the trade, and then here, looks like it gets to that level there. So there you go. Now within, what's that, half an hour or so, that would be 5, 10, 15, 20, 25, 30, about 35 minutes into the trade. We've sold half of the position and we're now risk-free, and we still have half of our position. Then we move into the optimizing profits. So do you see the logical process of it and the flow? Okay, identify, control, mitigate, and then we go into the optimizing profits. So for me and my personality, I like to get in, hit it, free roll it, and then get out of the way. Let the stock do whatever the stock is going to do in the optimizing profits. And I'm just then going to try and ride the intermediate term trend. That's what I am. I'm an intermediate term trend follower. I want to be involved in the strongest stocks in the market. Ideally, they are quick stocks. And then I just want to get in, hit it, free roll it, let the trend play out. And you never know whether the trend is going to be 5%, 50%, 500%, or if you are going to get stopped out 5 minutes later. Nature of the beast. You have no blimmin' idea. Okay, no idea. So what I want to do is just do this, okay? I'm just going to transition back onto the daily chart. So you're going to see this first bar, okay? So let's go back onto the daily chart. So this is the first bar here, okay? So remember, you targeting it through 170 like this. Okay, so this is going to be your entry plus half the free roll. So then we go into the optimizing profits. Okay, so it's coming out of this cup and handle, law of cause and effect, decent sized calls here. Could be a decent uptrend. And again, this is a good move here. Okay, you want to get a feel for the stock. So what I'm going to do is just play this forward. Okay. Again, you've probably seen some bar by bar deliberate practice videos on the channel. Okay, so the stock is now trending out here. Okay, we've got lots of 52-week highs. It's looking pretty good. So in our head, we may go, yeah, do you know what? Actually, 10-day EMA. You may decide you go look back at previous breakouts. How does the stock move? You may go, yeah, do you know what? 10-day EMA I think is going to be the best moving average to use as a trailing stop to help guide my selling decisions for when I want to be exiting. Or you may go, do you know what? Actually, when this stock starts getting extended, I'm going to choke off part of the position by going lower the bar for a quarter of the position. Then I'll keep a quarter back for the first close below the 10. Or maybe you go, actually, I'm just going to go 10-day and 21-day EMA as trailing stops for quarter. You'll have to decide. Again, base it on the character of the stock. Assess the stock's own action. How does the stock like to move? And based on that information, what are you going to do in terms of your selling rules and selling guidelines for the stock? How you treat Coinbase can be very different to how you treat other TML, so true market leader stocks, momentum leader type stocks. It's based on the character. You have a framework that you're operating to, but the framework is adaptable given the type of stock or based upon the type of stock that you are trading. Okay, you're probably going to treat Coinbase different to a Microsoft. They're very different stocks, okay? So when we're playing through Coinbase here, okay, so let's just say we have a stop loss Let me just do it with like a red line like this. Okay, so let's say we have our stop loss like this. So this is just going to be our stop loss. Maybe we go stagger like that. So now we've staggered it. Okay, so we're just using it as trailing stops. Okay, shakeout demand tail. Okay, first close below the 10-day EMA. There you go. Simple. Quarter there. Exit. And then move this one up a little bit. Again, 21-day EMA. Blue line, trailing stop. Okay, that's a gap down reversal bar, inside bar. Okay, gap down shakeout to the 21. Okay, reversing. Probably want to push that stop loss up now. Just like that. Okay, and now the stock may be building another continuation type base. So maybe it's going to kind of pull back in here, tighten up like this, and then suddenly you have a smaller cup and handle type pattern. Isn't that interesting? And then maybe there's an ad spot over here. So hopefully that was really thorough. We're going to go on to AMD in a second, but really thorough for how you actually think about, okay, break it down, deconstruct it, 4 component parts of a trade. Number 1, identify. Number 2, control. Number 3, mitigate. Number 4, optimize. Like, it ain't rocket science. Okay, break it down, distill it, and then realize you can get better at identifying setups. You can get better at controlling risk. You can get better at risk mitigation. You can get better at optimizing profits. No matter how good you are, how experienced you are, you can always get better. You can always improve. If you're not moving forward, you are moving backwards. So let's go do AMD. Now this is a ridiculously good setup. This is one I was targeting. I was targeting it with a buy stop limit order. It gapped above the limit on my buy stop limit order. I wasn't quick enough to then change and go into an ORB. Hindsight 2020, I should have done that, right? But AMD setting up here. This is a ridiculously good setup. It's probably like a 3-bar NR and certainly a 2-bar NR if you watch my Toby Crabell video. It's a ridiculously good setup. Like, take a picture. It's a ridiculously good setup, okay? Especially in these type of stocks, okay? TML type stocks. So there are 3 categories of stocks. This is how I categorize them. I have TMLs. This is your William O'Neill, Can Slim, big earnings, big sales, big estimate, global product, new technology, institutional sponsorship, yada, 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 right? Okay, you have those kind of stocks. Then you have momentum leader type stock that have high 20-day ADR percentages, preferably like 4%, 5%, 6% and upwards, have high 50-day average dollar volumes, preferably kind of 500 million and above, maybe getting into a billion plus, okay? They can sometimes have high short interest as well if you're thinking about the Carvanas of the world. And then the third category is group theme leaders. So this is transitory, okay? This will change. You'll see, wow, okay, there's leadership in semiconductors. Now there's leadership in software. Now there's leadership in financials. Now there's leadership in solar stocks. Now there's leadership in oil and gas. Okay, when you start seeing the group strength coming through and that group moves to the top and you're like, wow, this is a leading group right now, a leading theme, maybe it's kind of EV, whatever it may be, it changes, okay? What are the leaders within that group, within that theme? Now, I then categorize it from tier 1 to tier 3, and each stock can appear in multiple categories. So when I'm thinking about Coinbase, I'm going tier 1 TML, tier 1 momentum leader, tier 1 group theme leader, as crypto stocks were pretty darn strong and still at the time of filming this are pretty strong as well. If you're thinking about Coinbase, thinking about Hudge, you're thinking about MicroStrategy, thinking about CleanSpot and some of the others as well, okay? So that's how I kind of categorize it, and that's the identification, okay? So in my head, I've been doing this a little while. In my head, I'm then categorizing the stock for, okay, I'm looking at AMD. How would I categorize this? Okay, is it a momentum leader type stock? Not really, okay, a little bit maybe, but not really. The ADR is okay, but it's not one that has like an ADR of like 6%, 8%, 10%, 12%, 16%, like 16% like CleanSpot, okay, so it's not really, maybe like tier 2. Is it a group theme leader? This time here is one of the strongest semiconductor stocks along with the likes of Nvidia. So okay, it's kind of tier 1 in terms of group theme. Okay, it's a very strong semiconductor stock. In terms of TML, is it kind of tier 1 TML up there with like an Nvidia? No, it's probably tier 2. Okay, so this is how I'm kind of thinking about it, categorizing it. If I start going, it's tier 3 there, tier 3, I'll probably just go, nah, whatever, I'll wait, okay? So this one here, wait, there's always another bus is what I mean, okay? There's always another bus, there's always another trade, there's no need to force anything, okay? But this setup here, ridiculously good, okay? Volume dries up, yada, 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 tightness and price, and it's the point, okay? It's the Minervini point, volatility, contraction, Toby Crabell point of the contraction and expansion principle, okay? Contraction, like this, is followed by expansion. So now we're looking to trade the expansion. You got it, right? So what we're going to do here, let's go down to the 1 minute chart, okay? So this is going to be AMD. I'll be a bit quicker than I was on Coinbase. So the high of the day is going to be at 17684. That's going to be our pivot point. That's going to be where we're looking for the buy point, okay? So let's do this on a 1 minute chart, and I'll teach you a 1 minute ORB, okay? Now, this is, so the setup, ridiculously good. For me, probably a 9 out of 10 setup. This first 1 minute bar, Pretty much 10 out of 10, okay? Couldn't be much better. If you think about it, so the prior high is down here, okay? 17684. So it's gone above that. Now, I was targeting it with a buy stop limit order, trying to get it within 0.5%. So I was down here trying to get it like this, and it didn't. So like 177.76 kind of rings a bell to my mind. Okay, so it gapped up here. I didn't get filled on it. Again, there's pros and cons to buy stop limit orders, right? Versus ORBs and vice versa. So it gapped up here. Now, what's important about this bar? Do you see where the open of the bar is? And you might be like, yeah, the open of the bar is about 179.77, isn't it? You're missing the point. The open of the bar is the low of the bar. Think about this. It's a ridiculously good setup, and you are looking for other traders, other market participants to see what you see and then start buying it. If you are the last person buying, you're probably going to get stopped out shortly afterwards. Okay, traders, other market participants have to be willing, assuming you're going long, have to be willing to pay a higher price than what you paid. Think about that. Other traders and market participants, for your trade to be profitable, have to be willing to pay a higher price than what you paid. If they don't, okay, stocks will fall in and of their own weight. Okay, so you need other traders to see what you see and be willing to buy. Be willing to step up and start buying shares, preferably after you, so then they can push the price up, okay? But this is an important concept. So again, when I was just rambling about the categorization of stocks, okay, TMLs, momentum leaders, group theme leaders, if you can go tier one, tier one, tier one, guess what? It's probably on a lot of other traders and market participants' radar. They're probably seeing what you see, certainly if they're highly trained traders. They're probably seeing what you see. So they're probably going to step up and buy. Maybe they do, maybe they don't. You've got to find that out, nature of the beast. Nobody knows what's going to happen in the future. But here, what do we know? And this is about then developing that Bayesian mentality. You constantly update your decision-making process as new information becomes available. You are not stagnant. You are not dogmatic. You update. New information becomes available, boom, we update. You can get new information second by second, minute by minute, 5 minutes at a time, 1 hour at a time, daily count, whatever you want to do. However you best interpret the information, use that. But here, obviously on an ORB, we're using the 1 minute chart. That's where we're getting our information coming from. And we are getting information from multiple timeframes. We got our information from the daily chart. Okay, great looking setup on the daily chart. ADR percentage, 3.72%. Kind of strong stock in terms of TML, momentum leader. Okay, it's okay. Group theme leader. Yep, semiconductors at this time, pretty strong. NVIDIA rocking and rolling. Okay. So then what we're doing here is we are using information across different timeframes to best serve us as we are in different components, different phases of the trade. So right here, what are we in? We're in the identification, controlling risk, and risk mitigation. We're on a lower time frame here if you're using an ORB on the 1 minute chart. As I get into the optimizing profits, guess what? I'm never going to look at a 1 minute chart. Once I am in the trade, free rolled it. Again, I'm a swing trader. I'm an intermediate term trend follower. When I'm in the position, and I'm into the final part, I'm in the optimizing profits. Okay, what are the selling rules? What are the selling guidelines that I am using to optimize the profits, both in terms of monetary gain, but efficiency of the monetary gain? I'm not looking at the 1 minute chart. I will make 1,000,001 mistakes on the 1 minute chart. You could have a stock that goes up 1,000% on the daily chart. If you were to look at the 1 minute chart, there's no way you would have held it. Because during that advance, you would have had horrendous looking candlestick that scare you out. You're like, oh, it's down, I'm out. It's not going to serve your purpose. So this is why that Bayesian mentality of update your decision-making process when new information becomes available is dependent upon what phase of a trade are you in, where are you in that trade, and then are you using the most appropriate information to help serve your purpose of being a good trader, of making good decisions. So here on the 1 minute chart, gap up, open on the low, pushes up. Let's go get the calculator again. This is a long video, isn't it? Hopefully it's useful. So this bar here, okay, what's the volume? Around about 1 million shares are traded on this first minute. Let's take an average price of about 180. Okay, so let's go take a look at the dollar volume. Okay, the dollar volume, I think Coinbase was 102 million. What do we have here for AMD? $180 million worth of stock are traded in the first minute. Again, we're trying to make the invisible visible. Understand this. We're trying to make the invisible visible. When people say, yeah, supply and demand, a lot of supply, a lot of demand, can you see it? Show me it. I want to see it. Okay, you should be able to see this. $180 million worth of stock traded in the first 1 minute from a ridiculously good setup on the daily chart. What do you think market participants are doing? Does it look like they are buying, or does it look like they are selling? And how aggressively does it look like they are buying? pretty aggressively, right? So this is going to be an ORB on the 1 minute chart. You ready? So let's get the trusty fib retracement tool. Again, I'm not using fib levels as I said earlier, okay? These are the levels that I use, okay? Here, 0, 1, 2, 3, like this. Now what we're going to do is for this one here, we are going to sell part of the position at 2 times the initial stop loss. Ready for this? So let's just go and work out here, okay? It's going to be 0.56%. Is going to be the initial stop. Assuming perfect execution, we are going to assume perfect execution for the purpose of this video. Then you're going to have your free roll target up here at 182.84. And I'll explain why. But first and foremost, okay, we've identified the setup, intraday action on the 1 minute chart. Are we seeing the things we want to see in terms of a lot of buying? Yes, we are. Now we flow into the controlling the risk. 0.56% initial stop off an ADR of 3.72%. Favorable, not favorable. Ridiculously favorable. Okay, $1.02 risk per share. Now watch this, okay? If I were to take this from 180, I hope it's going to work this time. It annoyed me. It was a penny out on Coinbase, wasn't it? But here we go, okay? 184, let me see if I can get it. There we go. Okay, so here we go, okay? Imagine this, all right? We're going to use some simple numbers here. You ready? Ready for a little bit of maths? Okay, I have a 2-year-old, she's nearly 3, but she should be able to do this pretty, maybe within 6 months or so. But what we're going to do here, okay? Imagine this, right? Let's go 40, so it's really big over here, okay? Let's say you're going to buy 3 shares, okay, like this. You're going to buy 3 shares at 180. Now, don't worry. You're probably not going to buy 3 shares, you're probably going to buy more than that. But it's so you understand the risk mitigation maths, okay? So imagine you buy 3 shares. Now you can go and add a whole bunch of zeros onto this if you want to, okay? Okay, tweak as appropriate, but the math stays the same. So what we're going to do here is you're going to buy your 3 shares. And your stop loss, SL, is going to be equal to $1.02. You see this? 1.02. Again, we're assuming perfect execution. You're just literally placing your stop loss on the low. Maybe you want to go a penny below the low, but these figures work quite well. Okay, $1.02 and $2.04. Easy to follow along. Okay, so your stop loss is going to be equal to $1.02 risk per share, like this. Okay, so your total risk on the trade, if we do this here, in terms of the amount that you're risking per share, assuming you get perfect, you get stopped out perfectly, is going to be 3 times by 1.02, like this, which is equal to, if my maths is right, 3.06. So $3.06 is what you are risking on this trade. Yes, you're buying three shares at 180.80. You're putting your stop loss here at 179.78. So that's going to be $1.02 risk per share. Times your 3 shares by $1.02, you get $3.06. Make sense? Nice and easy, right? But now what we're going to do is we're going to have your free roll target. So we're going to put your free roll target up here, okay? So your free roll target, let me move this over here. Your free roll target is going to be here, 2.04. So I'm going to go FR, free roll. I'll just write free roll, it'll be easier. Free roll equals $2.04 per share. Okay, like this. Now, why is that? Because if we're able to free roll here, so let me just go type this in for you. If we were to able to free roll here, okay, so this is going to be 1/3, stay with me here, this is really important, 1/3 free roll target, okay, just like this. We're going to get filled here, and then we're going to look to free roll there, okay. Let me maybe play it forward 1 bar. So there's going to be your entry, just so you can kind of see the trade playing out. Hasn't powered out the gate, kind of really follow through yet, that's absolutely fine, doesn't always happen. So your entry is going to be here at 180.80, okay. Let's go back to here. So our free roll target is going to be here. Is going to be 182.84, which is going to be $2.04 per share. That's what we're trying to lock in here. Why? Because our risk is $1.02 per share. So our free roll target now, we're looking to sell 1/3 of the position at 2 times the initial stop loss, or wherever we could move the stop loss up. But here we're just doing it off the initial stop loss. Okay, so watch when this plays out. I'm just going to play it forward to when it actually gets to that level. Okay, so this is then 1, 2, 3, about 4 minutes later. Okay, what you've been able to do here is you've been able to sell 1/3 of the position. In this instance here, we're not trading very many shares, just to illustrate the point, okay? But you've been able to sell 1 share at 184.82. Now, why would you want to do that? Well, what we've done is free roll 2.04 per share. So that 1 share that we just sold has locked in a profit of $2.04. Why? Because we bought it at 180.80 and we just sold it at 182.84. That, to my maths, and what TradingView is saying here, is $2.04. Make sense? But you still have what? You still have 2 shares. Interesting, right? You still have 2/3 of the position. So on Coinbase, what I showed you was taking off half at 1 times the stop loss. That could be initial stop loss, could be new stop loss because you pushed it up in terms of the risk mitigation. But here, what we're doing now is selling 1/3 at 2 times the initial stop loss, which is on the lower the bar of this gap. Make sense? You with me here? So we've still got 2 shares with $1.02 risk per share. So remember, so we have remaining 2 shares, like this, let me type it, remaining 2 shares, which equals 1.02 times by 2, which equals 2.04. Haven't we just seen this number? Right there. So remember, we sold 1 share at a profit of $2.04 per share, and we still have 2 remaining shares that have risk associated with each share of $1.02. Because remember, we bought them at 180.80 in this hypothetical example. Our stop is still at 179.78, so that is $1.02 risk per share, assuming perfect execution like we're doing here. You're going to get some slippage as it moves up through the high. You're going to probably get some slippage as it moves out through the low if you were to get stopped out. But that equals $2.04. Go and add a load of zeros to this. The maths is the same. Go change the share chart. The maths is the same. The math is the math. But 3 shares here just breaks it down so you can see, oh, okay, that makes sense. So what have we been able to do here? Well, because it is such a tight stop loss, and in terms of then position sizing, thinking about risk and thinking about total account equity risk, I prefer fixed fractional position sizing. Okay, so I'm looking to risk a fixed fractional amount of my account per trade. So invariably, that's going to be somewhere between 0.25% and 0.75%. Kind of ebbs and flows. I'd say the average is probably around 0.5%. So in this instance here, because the initial stop is so tight, you could load up because the initial stop is so tight. Now you want to probably have some kind of limits in terms of actually how much of your account you want in a specific stock. Because sometimes you could have such a tight stop loss because you're like, I could put my whole account in this and I'm risking 0.56%. But is it prudent to put your entire account in a single stock? You can get gap downs, you can get slippages, okay? Black swan events. Things can go wrong. Things tend to go wrong, okay? Murphy's Law. It is what it is, okay? So then you want to have some rules, some guidance for yourself that actually, I don't want to have more than 25% of my account in any individual stock. Again, you're big boys and girls, you've got to decide this for yourself and really think about your process from identify, control, mitigate, and optimize. But does that make sense there? So we're in the trade, we can hit it pretty hard because it's such a tight stop loss, and about 4 minutes into it, we've been able to free roll the trade and we got 2/3 of our position left. Is that a nice situation to be in? And again, being risk-free creates a carefree state of mind. Being risk-free creates a carefree state of mind. Really, really important. So now we move into the optimizing profit. See how we're flowing here. Okay, identify, control, mitigate, optimize. Now we're into the optimization. Is looking at the 1 minute chart going to help you optimize the profits? For me, no. I'm a swing trader. I'm an intermediate term trend follower. Looking at the 1 minute chart, I'm going to make 1,000,001 mistakes on it. I now do not ever want to look at a 1 minute chart for AMD while I'm in this trade. I'm just going to make a mistake. I have ADHD, I can be impulsive. I'm going to look at something on the 1 minute chart, the 5 minute chart, and be like, oh no, it's panic, sell. It's just stupid. I don't want to do that. Okay, so what we're going to do now, transition onto the daily chart. Now, let's do this here. Now, there's going to be a lot of things on this, so let me just clear it all. Okay, and let's say you got your entry roughly in here, okay, and then your initial stop loss is low of the day, like this, say you like that, something like that. Okay, I know the entry was maybe a little bit low. It's like 180.80 or something like that, wasn't it? 180.80, something like that. Okay, but you understand what I'm doing here, and then we want to be playing this forward. Okay, bar by bar replay function. Okay, we can transition over. Okay, supply shoot here. Again, the thing to have in your head is following these entries is it's probably going to go pop, test, and then the reversal if it's going to be successful. So let me just play this forward. But you want to be on the lookout for danger signs, okay, danger signals. So we probably got our stop loss like this. You can go back, you can decide, okay, what do I think is going to be best for AMD? 10-day, 21-day, potentially some back for the 50 if it gets extended. Do I want to be choking it off? I want to be looking for danger signs. This here, a danger sign. This is what I call a supply shoot. Big supply shoot, closes week, undercuts the prior day, 120 million shares traded on a circa $210 stock. Like, go and do the calculator on this, okay? Again, we're thinking about the dollar volume on the 1 minute chart, but now take a look at this, okay? 120 million shares traded, a few zeros there, times by, let's do an average price on that day, 212. There are, on that bar, on this day here, $25 billion worth of stock traded that we can see. $25 billion worth of stock traded. This is a danger signal, okay? If you followed some of my videos on the channel, this is a supply shoot. This is a potential change of character. So maybe here you want to go, do you know what? I don't like that bar. What I'm going to do is I'm going to stagger my stop loss, and guess what? You can stagger your stop loss. So remember, your entry was here, okay? Plus we sold 1/3 to FR to free roll like this. So now what you could do is just stagger your stops if you want. Stagger your stops. Put a third under there, third back here, try and play it for a bigger move. Great, you stopped out there, that's absolutely fine. And then you get stopped out there. Guess what? Every trade is not going to be an absolute monster. Few of them are. It's the 80-20 principle. 80% of your profits are probably going to come from about 20% of your trades. Then you can go and do the 80-20 principle on those 20%. It's how it works in trading. It just is what it is, okay? So that's the 1 minute ORB. Now, do you want to see an earnings gap? So this one here, earnings gap, okay? So PLTR. Let me just show you some of the other fundamentals that I like looking at. So again, if you want to discount a trial for Market Surge, which were previously Market Smith, they've added a couple of new things. I like this EPS line actually. This is helpful. I like EPS lines up like that. I like relative strength lines pointing up like that. But let me just show you a couple of things that I look for in terms of the fundamentals. So where my eye is drawn to is over here. I want to see good earnings growth coming through. So you can see here, 1, 2, 3, 4, 5 quarters of triple-digit earnings coming through. Like it. Sales accelerating 8 quarters ago, 446 million, now up to 608 million. Estimates going forward look pretty good. Sales growth going forward looks pretty good. Little subtlety, little nuance for you here. See this EPS going into all-time high territory with the estimates up. Little subtlety, but I like that, okay? So that there, ticking a lot of TML type boxes. For me as well, PLTR, software stock, AI stock, I think it's going to be one of the real leaders, and this stock has a history of being able to break out and trend hard. Okay, I remember buying it here 2020, okay, powering out like this. Really like that. So you have phase 2, you have phase 3 distributional top, phase 4 downtrend, phase 1 base. So the stock here quite clearly is in a phase 2 uptrend, and big weekly bar there on the back of the earnings as well, and now building this base. Okay, but we're actually going to be looking at it right here. But yeah, I think PLTR is a pretty interesting one. I have a position at the time of filming this video. So anyway, this one here, okay, PLTR. So it's going to be an earnings gap, so a little bit different to what we're doing with Coinbase that moved through the high of the prior day. AMD setting up continuation base, but it gapped. This one here is just a straight up earnings gap, so something to look for. Okay, big base, stock in an uptrend, 52-week highs, ADR 4%, super duper liquid stock. Really like the fundamentals. You can see that earnings seem to spark this move here. See this? Look at the earnings. Seem to spark this move, and then a nice trend. So again, you want to get a feel. Look at these uptrends. Look at these up. This is what you want to see when you look at a stock. Okay, so it's building a big base. So it's the law of cause and effect. Big causes tend to lead to big effects. That's the Wyckoff point. So what we're going to do here is we're going to go onto the, let's go onto the 5-minute chart. We'll do an ORB on the 5-minute chart. Okay, so this is the first 5-minute candlestick of the earnings. Okay, so it gaps up. I want to try and delete that if possible. We'll keep it in the blue area. Can I get rid of that? Is the blue going to be annoying? Probably not. It'll be all right. It'll be all right. We'll go with it. Okay, so we get a gap up here. Bit of a surprise on the earnings and the revenue. But first 5-minute candle bar, is it great? Not really great, is it? But what happens with the next 5 minutes? Well, suddenly it's now looking a little bit better. So first 5 minutes got sold into a little bit, but now it's starting to reverse. Okay, so this is the earnings gap 5-minute bar. So through the high, there, stop underneath the low. What's our initial risk looking like? Initial risk 74 cents, circa 3.61% off an ADR of 3.98%. It's okay, but over 2/3, isn't it? But it's okay. Begins with a 3. Bleeding stock has a history of actually being able to do earnings gap and then trend higher as well. So again, you want to be assessing the previous character of the stock for what do you think is realistic for this stock to achieve when you're into the optimizing profit stage. If you get that far, go back, study the stock. Is this stock only going to go up 10%? When you go and look back at 5 prior breakouts, 3 prior breakouts, whatever it may be. Well, if you're going to risk 3% to try and make 10% overall, probably not worth doing. However, if you go, actually, I've looked back at the last 3 breakouts, 5 breakouts, 8 breakouts, 10 breakouts for this stock, take an average of those, it's going up around about 30% for it start closing below 10 and 21. So well, now you go in, okay, well, I could risk 3% to try and make 30%. That's 10 to 1. They're the type of trades we want to be looking for. And again, you've got to assess the character of the stock. Okay, taking a 3% initial stop on Microsoft, you've got to be asking yourself the question, do you realistically think it could go up 5 times, 10 times that before it starts closing below certain moving averages that you want to use as trailing stops to help guide your selling decisions? You've got to decide that. As I said earlier, not every stock is created equal, okay? So here, what we're going to do is target it through the high, stop underneath the low like this, okay? So that's going to be your entry. So remember, we then have our free roll target. So again, hopefully this is now making sense. You can either 3-roll by taking half the position off at 21.24 or taking a third off at 21.98. What do you want to do? Okay, how do you want to play it? How are you feeling about it? For me, I like to get in, hit it, free roll the trade. So let's play this forward, play this forward. Let's see if it starts moving towards the end of the session. Okay, picking up a little bit towards the end of the session. Getting there to your target. Okay, there. But for me anyway, I like to get in, hit it hard, free roll it. So ideally I can kind of free roll it early on in the position, because then again, being risk free helps create, for me anyway, a carefree state of mind. Great, I can get in, I can free roll it. So here on the first day, well, you had the opportunity to take half off and free roll it there, or take a third off and free roll it there. And then your stop is underneath the low of the bar. So now if we go onto the daily chart, and let's do this like this. So now you can see, okay, this earnings gap, but then you can see what happened during the earnings gap. And you had the opportunity, again, assuming good execution, you certainly take a half off, maybe you could have got the third off in there as well. Then your stop is underneath the low there. But this is why going bar by bar and deliberately practicing this and going, okay, how would I do it there? What am I trying to do it there? Again, you're trying to train your skill set deliberately. There's a reason why professional athletes spend so long practicing certain things. Whether it be a basketball player and they're at the free throw line, whether it be Steph Curry and he's practicing 3-pointers, whether it be Tiger Woods, McIlroy, top golfers on the range. But when a golfer is pretty good, right? When a top golfer is on the range practicing, they are practicing specific things. Okay, Tiger Woods had a brilliant kind of video in terms of his deliberate practice. He thinks about a grid. So every shot that he's taking is slightly different. He's picturing a grid out there on the range, and he's going, okay, I'm trying to hit a fade. I'm trying to hit a little cut like this. I'm just trying to kind of sting this one through the middle and keep it nice and low. There's a brilliant story about Lewis Hamilton as well. So Lewis Hamilton's dad, I'm a big F1 fan. Big F1. I've been talking a little while, haven't I? Big F1 fan. Okay, Lewis Hamilton's dad, when he was in his karting days, would watch where the quickest drivers were braking into the hardest corners. So what Lewis Hamilton's, this is deliberate practice in a nutshell. This is such a fantastic parenting lesson as well. Guess what I try and do in my own parenting. So Lewis Hamilton's dad on the go-karting track would look at where are the quickest drivers braking into some of the most challenging corners. Then what he would do is he would stand an extra couple of meters into the corner. So beyond their braking point, he would stand 1 or 2 meters further. And Lewis would see where he was stood. And Lewis would know, if I want to be faster than the other guys, I have to brake where my dad is stood. And Lewis spoke about it, and he said there were sometimes my dad would stand there and there was no way I could brake there. There was no way I could brake there without crashing. Like, he just thought, I cannot do it. And guess what? Sometimes he did crash. But then on the next lap, he tried it again. And maybe he got a little bit better at it. Then maybe on the next lap he got even better at it. And then suddenly 3, 4, 5 laps later, when he's practiced it deliberately, okay, that's my braking point. I now got to feel the car or the go-kart. I've got to feel this corner. Where am I positioning myself? I've got to get better. I've got to get better reactions. I've got to get better at this. But by his dad standing there and saying, Lewis, if you want to be the quickest guy, this is where you brake. If you want to be quicker than that guy over there, this is where you brake. This is your braking point. Do not brake till you get to me. I just think that is such a kind of fantastic story, both from a deliberate practice standpoint, but also from a parenting standpoint as well. And really being vested in your children's success and really trying to help them push themselves. So in trading, a lot of it is pushing yourselves and going, right, I can improve my skill set in identification. I can improve my skill set in controlling risk, in the risk mitigation, in the optimizing profits. Like, realize you can deconstruct it. Trading is a skill set. You can get better at it. I constantly, every single day, I'm trying to get better at trading. Like, I obsess about it, myopically obsess about getting better at trading, and you can do the same as well. So I'm going to wrap the video up there because that's quite a long one, but hopefully it was useful for you in terms of really thinking about a little bit about QULLAMAGGIE's kind of process, deconstruct it into identify, control, mitigate, and optimize. Maybe you learn a couple of new things there in terms of the risk mitigation as well. Remember, you can go and access my screen here. I'm going to keep this screen up for free for you for a week from when I publish this video. So toward around the end of March, I'll be taking it down. But this one here, okay, free screen, you'll find stocks like Coinbase. That's how I found Coinbase and AMD when I was looking to trade. It was from this screen here, okay? So that's it, guys. I'll wrap it up there. Thank you very much for watching. Certainly, if you made it all the way to the end, I really do appreciate the support that you guys give me on the channel. And I look forward to seeing you in a future video.